Hello, ladies and gentlemen. In the spirit of love of this season, I welcome you all to yet another promising edition on the Extra Speed Live. Well, before we kickstart the session, let's run through our daily routine just to quickly confirm that we are all on the same page. So, if you can see my screen, and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. Your feedbacks are very, very important to me, as this will give me a point of reference that we are all on the same page. And thank you very much as you do so. And in fact, if you can hear me very well or the sound is distorted, please feel free to let me know in the comment section. So I look forward to your feedbacks, please. And while I load up my comment section, thank you very much as you do so. All right. Let's see what we have here. Okay, thank you very much, guys. I can see you, Scott Gaylor. Good morning. MCM, good morning to you. Thank you very much. Boone, good morning. Hello, Tiger. Josie Lagaras, good morning. Murphy G, how are you doing this morning? Good morning to you as well. All right, so I think with this couple of feedbacks, I guess we are all on the same page. And in that regard, we shall be diving right into the business. So, once again, I welcome you all to yet another promising edition on the Extra Speed Live. My own name is Sheriff Daramola, and in fact, for the next 1 hour, I'm going to be your host as we will be delving into the financial markets using our basic tools such as the economic calendar, key levels, trend lines, and of course chart patterns to unravel the potential trajectory of price action for today. Well, so far this week we have been monitoring four financial assets. In fact, we have the USOILSPOT, the USDJPY, the USTech100, and of course the XAUUSD on our watch list for this week. And in the last 24 hours, we've seen price action move significantly well in our favor, especially following the US CPI data, which came in yesterday beyond all market expectations, giving the dollar a platform to rise. So as a result of this, we have quite interesting trading setup ahead of the New York session today. So I wouldn't want you to miss out on them. So I encourage you to stay tuned in. Grab your favorite beverage and try not to miss out on any of the valuable ideas we will be talking about in a moment. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with us. Of course, I do know you will be wondering what this is all about. What is it that we are doing here on the Extra Speed Live platform? Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session on a daily basis. It officially kickstarts about 10 a.m. UTC, 11 a.m. West African time, and depending on your time zone, I recommend that you stay tuned in so you don't miss out on what we will be deliberating on today. And of course, I want you to also note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and, of course, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiment for today. And of course, we all know how important this is, as these fundamental factors usually manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and in fact after this economic event. Now, based on the assets we've been monitoring since the beginning of the week, our central focus on the economic calendar are on economic features from both the United States and the Japanese economic docket. Well, so far this week, we really had, since the week began, the only high impactful event we were looking forward to was the consumer price index, which of course came in beyond expectations. And for those who really don't know what the CPI data is and how important it is, well, I did emphasize yesterday that this data examines the average change in prices paid by consumers for goods and services in the last 30 days. And a higher than expected CPI data usually leads to concerns about inflation, impacting market sentiment, as it may prompt expectations by the Fed to go ahead for tighter monetary policies to control rising prices. And if we look at what happened here yesterday, it was quite a phenomenal figure, as we see all the CPI data both from the year on year for the excluding food and energy, and for the month on month, and the month on month for the food excluding food and energy, all came in beyond expectations, as you will see here: 3.9%, 0.3, 0.4 and 3.1% respectively, giving a positive deviation to these figures for yesterday. And what does this simply mean? Well, it's quite very simple, as you all know how we have been anticipating the timeline to which the Federal Reserve is likely going to be easing the monetary cycle for the year 2024. And based on the data that has been churning out from the US economic docket in the last 2-3 weeks now, we saw how resilient the US economy is. And as of December last year, the Fed were contemplating us on cutting interest rates as early as the month of March of this year. But based on the data churning out from the United States economic docket, this appears to have been on hold right now. And of course, the Federal Reserve Chairman last week emphasized that inflation in the economy is still high, hereby inciting the idea that interest rates may be higher for an extended period of time. Now, culminating into the CPI data from yesterday further emphasized this stance, and of course it's more like an hawkish outlook for the US dollar. So today we are going to be looking forward to see if the dollar may likely continue the uptrend, or we may see some profit-taking activity happen following that strong impulsive move that happened yesterday. So Going ahead into today's activities, Wednesday, February 14th, we have a couple of impactful events we are looking forward to today. Well, from the United States, I think in about 3 hours from now, we are going to be witnessing a speech from Goolsbee. Goolsbee is the Chief Executive Officer of the 7th District Federal Reserve Bank of Chicago, and is also a voting member of the FOMC. Then later on today, we are looking at the Michael S. Barr, who is the Vice Chair for Supervision of the Board of Governors of the Federal Reserve System, and is also serving as a member of the Board of Governors for an unexpired term ending in January 31, 2032. So everyone will definitely want to be looking forward to their speech, especially after the CPI data came in yesterday. And of course, whatever they will be saying will be giving us an insight into the monetary policy outlook of the Federal Reserve, and as well give us an insight into the health situation of the United States economic docket. So we look forward to see what they are going to be saying. Then later on today, during the Asian session, we will be looking forward to the gross domestic product quarter for quarter four from the Japanese economic docket. And for those of us who do not know, the GDP is a key economic indicator representing the annualized percentage change in Japan's real GDP during the fourth quarter. Anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of economic health and growth. Now, a higher than expected GDP growth often strengthens market confidence, leading to positive price action in favor of the Japanese yen and potentially influencing the Bank of Japan's decision on interest rates. Now, looking at the data we have here, the previous data for the previous quarter came in at a deficit of 0.7%. And based on what is on ground and based on what economists are seeing as regards to the economic activity in Japan, they are projecting a 0.3% expansion, which is a little bit higher than the previous data. So there is some positive traction in the year favoring the Japanese yen. And remember, we talked about the hawkish comment from the Bank of Japan's governor a couple of weeks ago, where he cited a tendency of a potential pivoting from their current ultra loose monetary policy as early as the month of March through April, which of course is one glimmer of hope for buyers of the yen. And as we anticipate the GDP data from the Japanese economic today, I'm very certain, I'm very convinced that we may likely see some interesting anticipation ahead of this event, giving us beautiful setups that we will be using to guide our trading decisions for today. So stay tuned in as we will be diving right into the business to see what we will be using to guide our decisions for today. Now, going right into the chart, our first touch for this morning is going to be the US All Spot. And the US All Spot has been doing very well since the beginning of the week. Well, at some point we were selling the US All Spot, remember, before the bullish momentum began, breaking out of our key level at the $76.50 area to trigger our first buy position for the week. And since then, we have been buying this particular asset. Well, for the sake of clarity, and especially for those of us who missed out on our earlier sessions, let's quickly run through how the week began so we can all be on the same page and understand what really led to the decisions we made on this asset since the week began. So at the beginning of the week, the first thing we noticed on this chart was the fact that during the first 10 hours of the week, price action was initially confined within this range between the $76.58 level and the $76.26 level to emphasize the prevailing uncertainty in the market at that particular point in time. And of course, during this period, we know that due to this uncertainty, we will need some clear signals before jumping into any decision. So as a result of this, we do exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. And during our live session on Monday, we begin to notice how sellers have been trying to break through that support line. In fact, we already saw price break down the support line of that range during our live session on Monday, and I did emphasize that we shall be selling at the retest of that structure, and in fact that was exactly what happened. A couple of hours into the New York session, we saw price come back, retest structure inside a bearish move, and price indeed moved about 100 pips thereabout, I think about 80-90 pips. And of course, you know how we do it when price moves significantly well. We move our stop losses, secure the current position, and of course, when the bullish momentum came in, we were taken out with a reasonable amount of profit, though it wasn't that significant. Then we saw this engulfing candle climb up, leading into a situation where price broke out of the resistance zone of that range to trigger our first buy position for the week. And since that moment, we have been buying this asset, remember, adding more positions at the breakout of the $76.80 level, and of course the $77.20 area, where we did emphasize that we will be adding more position if price continues to find new highs, and especially the fact that price still remains above that ascending trend line we identified at the beginning of the week further supports the idea of maintaining a bullish outlook in this particular market. And for those of us who still have a buy position still running at this point in time, well done, kudos to you. So what we want to be doing right now is to ensure that we move all our stop losses and secure this current buy positions immediately. We have some quite interesting fundamentals behind the scenes which may really affect the dynamics of this market. I will be discussing that with you in a moment. So at this point in time, it makes a lot of sense for us to move all stop losses, and I'm of the opinion that anywhere below the ascending trend line, anywhere around the $77.50 and the $77.30 area, which of course is right below the ascending trend line, makes quite a lot of sense for us to move all our stop losses to. Now, with a well-secured position at this juncture, what is going to be our plans for today? Are we going to continue buying this asset, or are there chances that sellers could come in at any point in time? Well, since the beginning of the week, our buy position still remains very active as the price action continues to respect the ascending trend line. Now, the US oil prices appears to resume its winning streak, drawing some buying interest during the Asian session early this morning. And in the OPEC's monthly oil market report that was released yesterday, I told you yesterday that we were looking forward to this monthly report. Concerns surfaced regarding the group's adherence to recent production cuts. Notably, only Kuwait and Algeria have implemented their agreed upon cuts, while Iraq's output remain well above the quota. Now, this tells a lot about what is going on within the members of the OPEC Plus, as majority are not actually adhering to the decisions of production cuts as informed by the leaders of the OPEC Plus. So this for us is a sign that production might continue to rise, and this could limit the upward trajectory of oil prices. Now, furthermore, crude oil prices may continue to face resistance following a significant increase in US crude inventories reported by the American Petroleum Institute API yesterday. Now, the report for crude oil stock for last week revealed a surge of 88.52 million barrels for the week ending February 5, exceeding market expectations of about 2.6 million barrel increase. So this is quite phenomenal. That's like a positive variance of over 6 million barrels. And what does this mean when there is a phenomenal rise in stockpile? It shows that supply is higher than demand. And when supply is higher, what happens? Price definitely will drop. And I think that is one of the reasons why we have been seeing this bearish traction since the later part of yesterday, as market participants are still trying to digest these figures. Now, the unexpected positive surprise in US inflation data yesterday may also exert downward pressure on oil prices, hinting at the possibility of prolonged higher interest rates in the United States. However, we should remain vigilant for potential dampened demand in the market, which could prompt selling opportunities as well. At this stage, it is very, very important that we safeguard all our long positions as market participants await the release of the U.S. Energy Information Administration's crude oil stock change data for last week, which everyone is expecting that there is likely going to be a decline in stockpile of crude oil and its derivatives in the United States. So with all these dynamics in place, how do we intend to position ourselves for the next move? And considering the fact that the EIA will be releasing their report later today, we've beginning to see some consolidation phase as the bullish momentum appeared to have stalled, at least in the last 24 hours. So preparing for today's trading session, how do we intend to manage our decisions? Well, first of all, let's have a quick look at things from an holistic standpoint. And to do that, I will be scaling up into the 4 hours time frame where our analysis started for this week. In fact, I would like to do some adjustment here. And if you remember what we did at the beginning of the week, we took into consideration the nature of price action since the beginning of the month of February, and this was what we were able to come up with. We understand that price action has been finding consistent higher highs and higher lows, giving us this beautiful ascending trend line to work with. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this particular asset. Now, with this in place, price trading above the ascending trend line, I'm of the opinion that we will continue to look out for more opportunities to buy unless the structure states otherwise by breaking down the ascending trend line. Now, I just needed us to see what things are looking like on the higher time frame so that we can all be on the same page when we scale down into the lower time frame. Now, so permit me as we go back down into the lower time frame to see what is really going on above that ascending trend line. Now, scaling down into the 1 hour time frame, this is what we have here. So as it is right now, we have the $78 area where we shall be looking out for more opportunities to buy. So if price action goes ahead to break out of the $78 area, we're definitely going to be adding more buy positions to our existing trade. However, if it so happens that the $77.20 area, the level where we had our third entry on this particular asset, is broken to the downside, at that time, if price breaks down the structure, the ascending trend line would have been breached. And this will affirm that buyers are no longer having a say in this market and that sellers have taken over the market. So it makes a lot of sense for us to look out for selling opportunities only if the ascending trend line is breached and broken to the downside. So it's a very simple setup we have here on the US All Spot, as you can see how crucial the ascending trend line is going to be playing a major role in guiding our trading decisions for today. So I encourage us all to mark out this trend line on our chart, and let's ensure that as long as price remains above that trend line, we can continue to look out for opportunities to buy, and then we have the $78 area to maximize the potential of this bullish move. And if price breaks down the ascending trend line below the $77.20 level, makes quite a lot of sense for us to join a bearish move to the downside. And if price continues to drop, the breakdown of our key level had the $76.50 level, which interestingly shares a confluence with that second ascending trend line, will be welcoming more selling opportunities. So this is my simple view on the US All Spot for today. I hope I made myself clear, and I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. Okay, I can see a couple of comments here from Storm. Hi, and Buhao, good morning to you. Zeph123, good morning to you. Then I can see Ados Vic asking, how do we predict an imminent breakaway? Very good question, Ados Vic. Well, there are a couple of ways through which we usually capitalize on such opportunities in this community. Now, the first thing first is for us to identify levels around those potential breakaway areas. Now, for instance, that we have this ascending trend line in place where, of course, you know how we use our ascending trend lines in this community. As long as price remains above the trend line, we want to be looking out for buying opportunities. However, if this trend line is broken to the downside, it obviously tells us that buyers may likely be losing the momentum, and that sellers may likely want to be receiving the baton to continue a downtrend move. However, most times this kind of breakaway could turn out to be a false one. Most of the time it does. And usually we want to wait for significant confirmations like a retest of structure to happen before we can jump into any position. So as a result of this understanding, what we were doing here is to there are two ways to which we can do this. The first one is to have your sell stop just right away below the structure. And for those of us who are having a sell stop right away are those of us who have been profitable so far this week. So we can afford to leverage on some of the profits we had made. Now, for instance, if you had been part of this profitable journey since the beginning of this week, definitely you can say, okay, fine, let me risk some of the profit I've made so far this week to test waters around this area and see if it's going to work. So with that understanding in mind, we have a sell stop order below the structure. However, if you are new with us and this is your first time taking an advantage and you don't have a leverage, you're not yet profitable on this asset, then if you are that kind of person, you want to exercise patience and wait for confirmations to happen before you jump into any positions. And confirmations will come in the form of a breakdown of structure, then price action comes back to retest the structure, and we want to see signs that buyers are finding it difficult to stay above that level. And this of course will reflect on the chart, most especially on the lower time frame, as continued selling pressure below the structure. Then we can actually join a bearish move to the downside. So there are only two ways through which we usually capitalize on that, and depending on where you are with us in this community. So if you have been profitable with us, you can afford to leverage some of the profit you had made by just placing a sell stop order below that structure. Or if you are new with us, then you want to exercise patience and wait for price coming back to retest the structure, giving us a confirmation before jumping into any position. So I hope I made myself clear. Does Vic? I'm very sure you must be new with us. That's why you asked that question. But it's okay. Just let me know if I clarified your question. And if you need further clarifications, please feel free to let me know. Rajesh, good morning to you. Glad to have you around with us this morning. So with that being said here, and in the absence of no further questions, I will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. And right here on the USTech100, remember we have been selling this asset since Monday's trading session really, and we've been quite very profitable on this particular asset. But before we go into the details here, let's quickly run through how the week began for us in this community and what led to the decisions we made. Well, at the beginning of the week, after considering the nature of price action since the month of February began, it was quite clear that the market was a little bit bullish, as we saw consistent higher lows and higher highs in this market. And to further emphasize the strength of the buyers, we did connect the series of higher lows, giving us this beautiful ascending trend line to work with. In fact, we had a couple of them. And of course, when we have ascending trend lines like this and price remains above them, we want to be looking out for patterns and structures that support the idea of buying. Now, as soon as the new week began, we saw that during the first 12 hours or so, price action was more or less trading within a range just between the 17,970 area and the 17,920, giving us an insight into the prevailing uncertainty in the market at that particular point in time. And for the fact that price action was trading above that ascending trend line, it made quite a lot of sense for us to look out for buying opportunities. And as a result of this, we decided to have a buy stop order sitting above the 17,970. Then we also added one more level at the 18,000 area to maximize the potential of that bullish move. Lo and behold, we saw price action trigger our first buy position around the 17,970, and we saw price moved over 75 pips in our favor on that first move, and about 45 pips on the second move. And of course, we did move our stop losses accordingly, especially when we have price move significantly well in our favor. So following that, we saw this bearish momentum come in, taking us out of that position with a small size of profit. And during our live session on Monday, I did emphasize that the only condition that will make us to sell this asset was for the ascending trend line to be broken to the downside. And interestingly, the ascending trend line shares a beautiful confluence with the support line of that range we identified at the beginning of the week, just right around the 17,920. So with this beautiful confluence here, we agreed here that the only condition that will make us sell is for price to drop below the structure, and that was exactly what happened. We saw price break down the structure during the later part of the New York session on Monday, triggering our first sell position for the week. And of course, we did position ourselves below the key level at the 17,800 to add more sell positions to our existing trade. So we had two sell positions running as at yesterday's live session, and we saw price move very, very well in our favor, as we saw price move about 450 pips on the first sell position and about 325 pips on the second sell position. And for those of us who did capitalize on that opportunity, well done, and kudos to you for being on standby to capitalize on that move. And of course, by now you must have been out of this position. Remember what we said here yesterday, that we do want to be moving our stop losses to secure the current sell position. And if you had done that at this point in time, you must have been out of the sell positions in a significant amount of profit. So once again, congratulations to everyone who did capitalize on these opportunities. Now, as we head into the New York session today, we begin to notice some buy pressure, as we saw the market attracted some buying activities, especially during the Asian session, to incite a potential reversal pattern on this chart. Now, the question as we head into the New York session today is this reversal pattern a form of retracement of that impulsive bearish leg that started on Monday, which could culminate at a point to now begin the second leg of the bearish move? Or will this be an outright trend continuation to the upside? Now, to have a better perspective into what is going on in this market, permit us to scale up into the higher time frame. And to do this, we shall be going into the 4 hours time frame, where for those of us who were part of our earlier sessions for the week, remember we did identify a rising wedge, which of course is a strong reversal pattern from a technical standpoint. And to give you a visual representation of what this is all about, look at what we have here. We saw a converging trend lines right here, which is known to be a rising wedge, and of course waiting for price action to break down the support line of that pattern to incite a bearish move, which was exactly what happened on Monday's trading session. And thank goodness we were on standby to capitalize on that move. Now, as it is right now, as soon as price tested that area around that psychological level at the 17,500, we notice buy pressure resume from that area. So let me highlight that level quickly so we can see how important that structure is. So I do want you to also mark out this level on your chart, as we will be needing it as a reference point to guide our trading decisions. And look at what happened immediately. Price tested the 17,500 area. We saw buy pressure resume from that area. And of course, if we go to as far back as the beginning of this month, you will see how that same level had continued to be a strong barrier for sellers, as every attempt by sellers to break through has always been met with strong resistance from the buyers, and this the same thing happened yesterday. Now the question at this juncture is, will this be a platform that will incite the second leg of the bullish momentum that started this month? Well, we have a couple of structures to guide that. One of them is this trend line, the support line of that pennant structure, which was broken yesterday. And of course, whenever price breaks down a key structure like this, there are chances that price may come back to retest the structure, maybe to incite a downtrend continuation. And in fact, if price breaks out, we could be seeing another opportunity to buy. Now, if we look at the distance between where price action is right now and this structure here, it's running into about 450 pips move, which makes it makes a lot of sense for us to consider taking advantage of that counter trend opportunity. And let's see how far it's going to take us to. Now, while we will be looking out for buying opportunities, maybe when we scale down into the lower time frame, it is also important for us to take note of our key level at the 17,800 area. Now, if we at any point in time find buying opportunities around this area and capitalize on that, if price gets into the 17,800, please, we need to move all our stop losses to secure that position and wait to see how the market will react to the 17,800. If buyers find it difficult to break through and we begin to see continued selling pressure below the structure, this could incite the second leg of the bearish momentum that started at the beginning of the week. However, if price breaks out of the structure, then this could give us more opportunities to buy. So now, with this understanding in mind, let's scale back down into the 1 hour time frame to see how the market has been reacting to this current structure. Now, scaling down into the 1 hour time frame, let's look at this critically. You will see that we have something like a reversal pattern, like a double bottom structure. We saw the first touch here, price came back around here, second touch, and boom, price is continuing to the upside. So when we see reversal patterns like this, the next thing we want to be doing is to mark out the neckline of that structure, which I will be giving a much different color. So let's give it a wine color instead, and we label it the 17,660 area. Now this, we've seen price action break out of this level already, so we missed out on this one. This happened early this morning. Now will price come back to retest the structure, giving us an opportunity to join that uptrend move? So let's see if the market will come back to retest the 17,660. If it does, we look out for buying pressure or reversal patterns to join that uptrend move. And if price goes ahead to break out of the 17,800, we will be looking out for more opportunities to buy. And don't forget what I said on the higher time frame, that when price gets into the support line of the pennant of the rising wedge, we saw that we want to be moving all stop losses to secure position as price may get into that particular structure. So please, let's take that into consideration while we continue to monitor price action. So there are two things we are looking forward to here: price coming back to retest the structure to look out for buying opportunities jumping into the uptrend move, or price may just continue to the upside, breaking out of the structure to welcome a buy opportunity for us. However, if price drops and continues to find lower lows, that is, if price continues to show signs of continuing to the downside, then I would like to sell only at the breakdown of the lowest point for this week, which is situated at this 17,500 area. So I will only be selling if price action breaks down this particular level. So this is my simple view on this particular asset today. So let's see how the market is going to play out as we anticipate the Fed official speeches coming up later today. So if you have any questions, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. I can see a couple of comments here. Okay, Amuzi says, please can you change your candle color? It's difficult to see. I think I will have to increase the pixel. I think that will be better. I hope it's better now. I will zoom it out so you can see them clearly going forward. I hope that will be better. Please give me a feedback afterwards to see if you can now see them clearly. All right. Thank you very much for that feedback. Then attention viewers, please be aware that there are scammers in the comment section posing as financial advisors, referring you to other platforms for financial advices. Please note that Extreme Speed is not responsible for any financial advice given in the comments, and we urge you to be very cautious and recommend that seeking financial advice from trusted professionals and not engaging with unknown individuals in the comment section. please and please abide with this instruction. Thank you very much as you do so. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right in to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. What a phenomenal move we had yesterday following the CPI data. Has price action at this point, we have a minimum of 3 positions running in profit, 3 buy positions running in profit, and at this juncture it is crucial to safeguard all buy positions as the Japanese yen appears to be gathering some support from various factors, which I will be discussing with you in a moment, and maintains its modest intraday gains against the US dollar, especially during the Asian session today. So it's very, very important. Let's kindly move all stop losses right now. Anywhere below the 150.400 makes quite a lot of sense to secure the current buy position. I want you to do that right away because we may see any sudden drop happen anytime soon. Well, so far this week we have been buying this asset. Remember, at the beginning of the week we did identify this descending trend line right here after connecting the series of lower highs since last week Friday. And of course, this descending trend line at the beginning of the week was giving us the idea that sellers may try to push price to the downside. So we did position ourselves below the support line of this beautiful range we identified at the beginning of the week, which was situated at exactly the 149.080 area. Though we had that sell position triggered, but unfortunately it didn't do very well at all. And remember, I mentioned here on Monday that if price at any point in time breaks out of this descending trend line, we then want to be looking out for buying opportunities. And to guide our buying expectations on this asset, we did mark out the 149.200 level to capitalize on any uptrend move, and we saw how price broke out and retested that structure, and since that moment price action has been finding higher highs and higher lows, and in fact we had multiple levels on this chart to position ourselves for more buying opportunities. However, prior to yesterday's session, we saw how price broke down this ascending trend line and then pushed price to the downside, giving us hope that there may likely be some profit taking activity around that area. And coupled with the fundamental factors I mentioned yesterday, I did tell us that the dollar still has a chance of finding higher highs in this market. Hence, we want to be positioning ourselves above the key level at the 149.600 and the 149.700 area to capitalize on any uptrend move. And this was exactly what happened. Price moved all the way into the 150.870 area, and for those of us who took advantage of this opportunity, well done to you. And if you still have a buy position running, I did mention earlier, kindly move all your stop losses accordingly and secure your current position at this point in time. Now, a shift in the global risk sentiment coupled with verbal intervention from the Japanese authority has provided a boost to the yen, as you will see in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 16, 17 hours or so. Price has been finding selling pressure, though it's still within a range at this point, But this verbal intervention by the what's his name again? I can't remember. Masato Kanda, who happens to be Japan's currency diplomat. He said something yesterday as regards to the fact that the Bank of Japan is prepared to intervene in the forex market if necessary. Now, the yen managed to recover some of its losses following the statement, the losses incurred after the US CPI report from yesterday, and the reassurance from this diplomat, Masato, may have given some glimmer of hope for the yen, but I'm still doubtful that this could go on further. But since we are looking forward to the GDP data from the Japanese economy today, well, let's see what that data is going to bring in, if it's going to give the yen some traction to go to the downside. Now, remember, a couple of weeks ago we also talked about the Bank of Japan governor Ueda, mentioning that the chances of the bank to pivot from the current ultra loose monetary policy is high due to the drop in the inflation data, and as early as the month of March or April is when this is likely going to happen. This is more or less like an hawkish comment, but the counter comment from the deputy governor regarding the caution that they are going to put into interest hike has also limited the traction in favor of the yen at this point. However, it is worth noting that the robust US CPI report from yesterday and hawkish outlook may continue to support a higher US Treasury bond yields, widening the US dollar Japanese yen rate differential. Now, this is expected to limit the Japanese yen gain unless maybe the GDP data comes in phenomenally well, maybe beyond expectations, and contribute to the restraining downside of the USD Japanese asset. So in this regard, we have a structure which we will be using to guide our trading decisions for this week, for today, and of course it still lies around that ascending trend line we spotted here yesterday. Remember, we identified an ascending trend line after connecting the series of higher lows, and we will continue to use that ascending trend line during today's trading session. So if price still remains above the ascending trend line, we definitely want to continue to look out for patterns and structures that support the idea of buying. So as a result of this, I have a buy stop order sitting above the 150.870 to capitalize on an uptrend move. So if price can take out this high here, then we may likely see another platform for new highs on this asset. However, if things become rosy for the yen, and in such a way that the yen gains some traction in follow-up with the Asian session today, well, a breakdown of the 150.400, which interestingly shares a beautiful confluence with that ascending trend line, will be all we need to join a bearish momentum to the downside. So you can see how crucial both the ascending trend line and the range between the 150.870 and the 150.400 is going to be playing a major role in determining how we are going to be trading for today. So I encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So let's mark these levels out and let's see how the market is going to react to this current structure. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds, we're already out of time, and see if there are any questions before we move on to the final asset on our watch list for today. All right, so in the absence of no questions, I want to assume that we are all on the same page and all I've said so far has been quite explanatory. And in that regard, and I hope you've marked out those levels accordingly. Very, very important. And so, with that being said, let's move on to the final asset on our watch list. So, the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we had a phenomenal move yesterday. In fact, I would consider the gold spot as one of the most profitable trade for us in the last 48 hours amongst the pairs on our watch list for this week, as we were able to scoop in, I think, close to 700 pips on about 1, 2, 3 positions, which is currently running in profit. And in fact, it makes quite a lot of sense right now that you lock in your gains from all sell positions taken yesterday, as the price of gold continues its sideways consolidation, leading into the UK session. And so please kindly move all stop losses. And if you ask me, I suggest that anywhere above the $1,995.50 level makes quite a lot of sense to move all stop losses to at this particular point in time. So please secure all positions. And for those of us who have missed out on our earlier session, let's quickly run through what we saw at the beginning of the week. So the week began with a very strong bearish momentum, though we had a range between the $2,027 area and the $2,022 level, as you will see here. And of course, we saw the character of the week of these candles around that resistant line, giving us signs that sellers are probably stronger at this juncture in the market. So we've been selling below the 2022, though the maximum we can get here was about 100 pips before we were taken out of that sell position. And during our session yesterday, I was talking about the fact that price was finding engulfing candles in form of a bullish candle all the way up, leading to the breakout of the key level at the 2025. So I did said that we should, if you remember what I said vividly yesterday, I did emphasize that sellers, the part of least resistance in this market is bearish. But if the market gives us significant opportunities to join an uptrend, we may want to take advantage of that move. And one of the things I said here yesterday is to capitalize on this bullish opportunity about the 2027. And in fact, we saw price move about 47 pips thereabout before the bearish momentum came in. Depending on where you had on that buy position, if you had moved your stop losses accordingly, well done. But if you didn't, well, price must have taken you out in a loss. But thank goodness we were able to capitalize on the bearish momentum. Remember, I did tell you yesterday that we are going to be selling at the breakdown of the key level at the 2025, then had more sell orders below the 2022, and of course below the $2013 area, all of which got triggered following the US CPI data that came in yesterday. And then we saw price spiral all the way to the downside into the $1,990 area, and has since then gone into a sideways trading activity to emphasize the level of indecision in this particular market. So once again, congrats to everyone who took advantage of this sell opportunity. Now, despite the post-US CPI losses, gold remains susceptible. In fact, it's still looking more vulnerable at this point in time. The unexpectedly strong US consumer inflation report released yesterday has sparked speculation that the Federal Reserve will delay interest rate cut until the June policy meeting. Now, this supports a higher US Treasury bond yields, and undermines any sustained upward movement. Of course, we do know how directly proportional the US Treasury bond yield is to the US dollar. Now, if the Treasury bond yield continues to grow, this favors the dollar more and, of course, supports more selling opportunities in the XAUUSD market. Nevertheless, the recent shift in risk sentiment, evident by a sharp decline in global equity markets, may aid the safe haven assets in temporarily gaining upward momentum, potentially making this upward momentum for me, I will see it as making a retracement of yesterday's bearish trend, and we are going to be taking that into consideration too as well. Now, given this fundamental backdrop, the prevailing path of least resistance for gold appears to be on the downside. So as a result of this, I was able to identify a structure this morning while I was trying to dissect this current market structure, and in fact I was able to identify a range between the 1,995.50 level and the $1,989 area, which of course is going to be playing a major role in guiding our trading decisions for today. And of course, you know how we use this kind of ranges whenever we identify them on our chart. Because of the uncertainty in this kind of area, we would exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. But after considering all the various factors I mentioned earlier, the path of least resistance is looking more bearish. So let us talk about the potentials of the sellers first of all. Now, considering from a technical standpoint the impulsive move that brought us into this point, the chances of this whole consolidation phase transitioning into a downtrend continuation pattern is high, where the breakdown retest of the $1,989 area will definitely be welcoming selling opportunities. So positioning ourselves below the $1,989 area makes quite a lot of sense for us to add more sell positions to our existing trade. However, if it so happens that the $1,995 level gets broken to the upside, then we might be having a reversal pattern on our table to incite an uptrend move. However, I do not want us to get too carried away with this uptrend scenario, as it may likely be a retracement of this bearish impulse leg that started yesterday in anticipation of another wave of bearish momentum. So we do not know if price action ever breaks out of the resistance line here. We do not know how far that momentum will go, but thank goodness we have levels on the chart that we can actually use to project where price may likely go. So we have the 2013, we have the 2022, and of course we have the key level at the 2025 area, where we shall be looking forward to see how the market will be reacting to this level to decide if we are going to be adding more buy position or probably get ready for the downtrend continuation. Now, if we look at from here to here is about 170 pips. That's quite a lot to catch there if price moves in that direction. But please note that if price duly moves in that direction, let's move our stop losses accordingly to secure the position whenever price action tests any of this level. Now, a breakout retest welcomes buying opportunity, but let's be very mindful that this is going to be a counter trend opportunity. So let's see if the market will break out the 1,995 level for buying opportunities today. And if it just goes to the downside, well, let's look out for selling opportunities. So our center of focus for today, let me zoom in so we can see things clearly. Our center of focus for today now is between the 1,995 level and the $1,989 area. So let's see how the market is going to be reacting to this particular structure. So this is my simple view on this particular asset for today. I encourage us all to mark out these levels and let's see how the market is going to be reacting to them. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds to see if there are any before we start rounding off on today's live session. Thank you very much. All right, so in the absence of no questions, I'll take this as a confirmation that we are all on the same page. And it's on this note, we have come to the end of the Extreme Speed live technical analysis session. And in fact, it has been a wonderful moment with you guys today. I really enjoyed every single moment indeed. And so far today, we were able to take all of the 4 assets on our watch list for this week, which includes the USOILSPOT, the USTech100, the USDJPY, and finally the XAUUSD, where we were able to identify simple trading setups that we will be using to position ourselves for the next move and of course manage our existing positions. And I do hope you all marked out these levels accordingly and structures as we illustrated during the course of the session. If you have done that, well done to you. So all we just need to do is exercise patience and wait for price action, these structures to mature before jumping into any positions. So it's on this note, I wish us all the best of luck. And for those who are joining us for the first time, I did not forget you guys. I hope you all enjoyed every single moment. Hope you were able to gain 1 or 2 things from what we discussed here today. And if you did, of course, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare for this beginning of the second half of the week. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.